Give me a quick second and I'll be right there. Jeff, I don't know if you need an extra minute to, if you're recording this, to set up recording devices or whatever, but maybe it's exactly 11:23. Why don't we officially start at 11:25, and that way people, if they need to get, a beverage or a bio break, they can do that. Is that cool? Excess of anything we use, but we do have a good edge, and that's what we're looking to do. All right. So who am I? I'm John Person. I've been around for too long, and I've created a bunch of indicators. Been a professional trader since, and owner of a brokerage firm. I've been on the floor since I started working with a gentleman by the name of George Lane back in 1980. He developed an indicator called stochastics. I got on the early ground stage of trading options in 1984 when they were first introduced to commodities. The very first commodity they ever introduced an option on the floor of the exchanges was treasury bonds. And back in if you remember the mid 80s when interest rates were going, they were coming off skyrocketing rates. Some of you guys might, ladies and gentlemen, may remember having a mortgage at around 16%, a 30-year fixed at 16%. That was way back in the day. So as interest rates were falling, bond prices were rising, and I was using a lot of the techniques and indicators that I built then still to this day. So if any of you have questions, we can probably get to those at the end on what indicators, and I'll share with you the ones that I use and what did I do recently and why. A lot of proprietary indicators. So for starters, I didn't invent what's called pivot point floor traders analysis, but I did modernize them, and I did make an indicator with the moving average approach, and I did use them more than just day trading. So we have multiple time frame indicators, which are very powerful in my work, which both helps to share with us what the market condition is, bullish or bearish, and what the projected price ranges are. These are very popular indicators that are on TradeStation, TD Ameritrade, or soon to be Charles Schwab's platform Thinkorswim, as well as TradeStation and Genesis. Those are the four business companies that I have dealt with through the years for the fact that they've been extremely reliable. So with that stated, I was introduced to HGSI many years ago by Jeff, many years, like I think 6 years ago, almost more than half a decade. And, I found it to be a very good program, but in my work, friends, I did a lot of work with automatic trading strategies, and I'll share that with you as we move on today, and how my indicators help me and platforms help me run scans for things. I also wrote a few books. One, I worked with the Hirsch organization. Jeff and I did the Commodity Traders Almanac for, I don't know, almost a decade. That came out of publication because, well, no one wanted to really trade commodities, really. I do a weekly advisory service. I have 2 live trading rooms that I step in and monitor Monday through Fridays, and we have one is for stock and options that we do based on our advisory service, and the other is an algo trading room, which is very unique. Win, lose, or draw, right in front of everybody. Trades are generated based on our algo strategies. I also am an active fund manager. I launched J Person Asset Management back in September. The greatest time of the world, right, to launch a long equity short volatility program was September of 2018. About a week later, my mother passed away unexpectedly, and again, you saw what happened in 2018. But the strategies and the indicators that we developed have helped us to outperform the market since that point in time, and this year has been a pretty decent year for us as well. So hang on. We're going to share with you some things that I think that will support a lot of what you've already maybe heard today, as well as why Jeff has probably invited me here. On your left is a book called Mastering the Stock Market. That book is brand new. It came out in 2012, and it's probably outdated except for everything in that book I use to this day. The book on the right took me 3 years to update it because of the market conditions, the changes, the trading, and the workload and the markets. And it seems in this environment, if you just walk away from your screen for 10 or 15 minutes, the market can change 0.5 to 1% on you in a heartbeat. And I'm talking the major equities, not a stock. Between last year and 2019 with the China deals and no deals, and this year, boy, we've had a lot of historic volatility. And when I say historic volatility, We just do not see the types of capital that's gone into equities and what's moved these equity indexes. And there's a couple of indicators that I want to share with you that you can find on any platform that helps us to understand the relationship of volatility. And that first and foremost, it's called average true range, ATR. It's the crux of what we use in a lot of our uh, um, dynamics, especially in volatility of the VIX, for example, and we'll get through that in just a little bit. This book, Candlestick and Pivot Point Trading Triggers, everything in that book you're going to see as an indicator I use to this day, and a lot of those indicators that were written in that book almost 18 years ago now, and that's why it's in its second edition. 18 years ago, that Candlestick Pivot Point Trading Triggers came out. My hair's a lot not as dark as it was then, but needless to say, everything in that book is dynamic. Last year, this was our based on my stock picks and the indicators we use in a newsletter advisory service. Remember, when you have an advisory service, you have to send an email out. You gotta have people have a chance to get executed and filled. It's a lot different than doing self-directed trading when you're doing your own. This year we had pretty active year for stock picking. Mostly in March, there were a lot of intraday trades because it was pretty crazy. But we also use options, as you'll notice here in our performance on options. It's negative. It's not very good at all. It's horrific, right? Compared to the prior year, options were dynamic. Well, if you notice here, there's a bunch of things that are highlighted in fuchsia, magenta, negative, 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 negative. These are all hedges that we have put on. One particularly, whether it was GE, whether it was a hedge in gold miners, we have survived the GDXJ, which most people did not. Most people don't realize that GDXJ went from about 48 down to 20 and then back to new highs. I'm very positive we're still in the position, and we used the options against a long position, and right now we have a collar strategy on that. So this is my J Person Asset Management, and I always find it to be this has not been updated. Our performance is more closer to 12, almost 13% as of Friday. We went flat. I'll share that with you in a minute. We do this on updated, of course, on a quarterly basis. You can see whether it's comparing to the Dow, the S&P, or again the DAX, the German DAX with some foreign investors. You can see that our drawdown has been very negligible in a very tumultuous time, and we're very, very happy. And a lot of things that you got to realize in J Person Asset Management, we do not use options because most of the accounts that we manage are retirement funds, IRAs, etc. And so therefore we're limited to products that we can trade. My teaching program and indicators are based off this 12-step guide, so to speak. PPS indicators, which can be found on HGSI. What is PPS? It's a momentum indicator. It literally paints arrows on the chart for buy and sell. And as it says here, it helps us to scan for results. So if we take HGSI and what we've created in the package for HGSI is the person PPS indicator. So you can find out if you're looking for end-of-day buys, and as you can see, person daily sell signals. On Friday, we had approximately just 257 stocks generated a daily sell signal. There is a few indicators that I'm going to walk you through, which are very powerful. One is called a relative strength. Many of you are already familiar probably with relative comparative strength analysis. It's not a price-based indicator that tells you whether a stock is overbought or oversold. Rather, it tells you if the stock's percentage change is outperforming relative to the S&P 500. So if the S&P 500 is up 10% and a stock is up 15%, the stock is outperforming in terms of percent change. And we have an indicator that we created using relative strength, and this is a proprietary indicator that's available on a few platforms, TradeStation. Actually, it's only available on two, HGSI and TradeStation. What it tells us and shows us unequivocally is whether a stock is in one of four stages, whether it's outperforming the market, weakening, improving, or actually just all out lagging. Lagging if long, red bad. Let's just put it that way. So if you have a daily sell signal in a sector or a stock that is lagging, and I'll just I'm going to take let's take the top one here. What the heck? So when you look at on a daily chart basis, here's the indicator. As you can see, it was starting to improve. The relative strength momentum indicator was starting to improve because it's even color coded by being fuchsia. And you have a PPS buy signal. This was been back on July 13th. And underneath is another tool called on balance volume. I didn't invent this, but I did help improve, and as well about 2 decades ago helped popularize reinventing the popularity of this tool. What's neat about this tool is it's based on the net change of volume from a given positive or negative price change day, I guess is the more simplest approach of explaining it. What I did is I overlaid a moving average to help smooth things out. When the indicator is above the yellow moving average line and it shows that the moving average line you can easily see is rising, that shows that there's an accumulation of volume. So when you get a buy signal, a PPS momentum price-based indicator buy signal, and down below, Jeff, actually if you see this, helped institute creating this histogram component. We did this originally in TradeStation and we put this on HGSI. Basically, it shares with you whether or not the market, without looking at the arrows, if it's in a green mode on the histogram bar, it says it's in a price-based indicator buy signal. And that's very positive. And so when the relative strength of stock's improving on rising volume, it's a good time to get in the stock. That's it. That's the essence in a nutshell. But when a stock is in a buy signal, and it might be green and it's in a buy signal, but the relative strength versus the market is weakening and the volume is declining, it's a no-brainer to stay the heck out of Dodge, and we avoid those types of trades. So what we're looking for in our scans, and as you can see, I don't have 1,000 indicators. There are some lines here, and I'll share with you what those lines are. First off, we have person's pivots, and we have something else called the last conditional change. If a market is going to break out of an old resistance, it's got to get above a blue line. It takes a little bit of training, but you can see, and I just want to validate that technical analysis, if you use just a handful of logically interwoven indicators. If I'm trading a stock, I want to know, A, is the stock in a sector that's outperforming the market? Am I in a stock that has a sector that's the majority of the stocks in that sector weakening? Which is really neat about HGSI is that this overlays the actual sector trend, the dashed gray line. So even when this stock generates a price-based buy signal, and yeah, it went up 1, 2, 3 days later, it did go up, the index or the sector itself was falling. So it's showing overall relative weakness of the sector. Now, is it possible one stock in a sector could outperform its peers? Sure. It reinvented the wheel. It discovered something dynamic. It, the CEO got fired. They hired a new CEO. I mean, a lot of things can transpire to make one stock against the whole sector outperform. We all understand that. But as a general guideline, if the sector is weak, even if that particular company is done something dynamic, you're fighting an upstream trend, and your current is against you. Now, what's neat is that we can look at, if you understand the scans and the tool that HGSI, and it's, let's call this a radar screen for a lack of education on my behalf. This is what I call it, because on TradeStation, this is what it would be. What's really neat is I can find out, and what we've created were listings of stocks that and indicators that are all on one page. I can tell you everything that I personally need to know about a company. Let's take we're going to go and double click on sector technology. I don't know who, Vico or Upland, if we had more time, I could get you guys to give me a pick one, but I just want you to know that I'm not by any stretch of the imagination cherry picking anything. But I'm a big fan of precious metals, as you know, because I'm in the junior minor ETF with a hedge. Workday has earnings out this week. And so I just clicked on Workday because I know I think it's Workday, or is it not Workday? It's, no, it's Work. Sorry, I confused that. My bad on Workday. It's Slack. Slack has earnings out this week. So here's the scenario. I have a stock that is trying to break out above a resistance. The Fuchsia, it generated a buy signal about a week ago. And boy, I mean, that's about a 20% rise in a stock in 1, 2, 3, 4, almost from the high opening that we saw on Wednesday. About a 20% gain on that stock. When you get a buy signal and the relative strength is improving and the volume looks strong, you could say, hey, that's a good trade. It's breaking out. It's pretty decent. However, when you start to say this stock is starting to show some relative weakness, it's breaking out, and the relative strength is not really accelerating. We're not seeing accelerated relative strength. We're not seeing accelerated big move up and not a huge gain in the volume. It's a little bit of an issue. Let's double check something, because I'm a big believer in multiple time frames. Big believer, to the point where I help really look at time frames from quarterly basis, financial quarterly, monthly, weekly, daily. When I look at this stock, I go, wow, it's in a weekly buy, and longer term, let me ask you a quick question from what we've just talked about. Using a relative strength tool, it's red, not too good. It went bright blue. Did it have any follow through on its relative strength? None. This is a relatively newer company. Volume trend didn't even get above its moving average. So this would be a stock that I would run a scan on. I would look at the daily and I'd say, you know what? It's not one of the best looking companies to be investing in right now, for me personally, based on, not that I know anything about this company, based on this tool, single tool right here. If you want to look at a stock and its relative strength indicators, the HGSI, the way we've laid this out, relative strength, and most institutional traders are all looking for stocks that are improving in their relative strength. They're looking for volume, and or they have a business model because someone else has done the financial and fundamental homework. I don't know anything much about Ida Corp, Integrated Utilities, but I do know that in that sector, we have how much of that stock, I just pulled out Ida Corp, utility. It's improving. Its relative strength is improving. It's in a sell mode. 52% of the stock's in one of my little buy signals. And, it's improving, and it's in a daily sell signal. So let's take a look at that. And I'd say, all right, it's in a sell signal. I get that. It's in a weekly sell signal. Do I want to buy this stock? And the question is, why would I buy anything that's in a higher time frame relative strength weakening phase? The sector itself is weakened. There's nothing strong about this. I avoid it. So again, for me, what I'm looking for stocks, and I am a top-down guy, which means I look at the overall health and breadth of the market. So I just wanted to give a quick example. When I have a 12-point approach to the market, I'm looking for the PPS indicator because it's easy to scan. So number one, I wanted everyone to make sure that I was able to define easy to scan. Real simple. If something's in a buy signal, I can scan it. If it's in a weekly, I can scan it. If it's in a daily, I can scan it. And even monthly, by the way. Now, we don't have enough time to get into my high and low close doji. It's a proprietary trading. It's actually a system. It's similar to a evening doji star bearish signal or a morning doji star buy signal. However, generally speaking, those two patterns don't show up a lot by the nature of what they are designed and explained in any candlestick book. But after a strong downtrend in the market, you find yourself in a doji, which is defined by a single bar, whether it's a day or a week, that the market has a range, a high and a low, and the market closes right about at where it opened the week. That shows a lot of what's called indecision. My trading strategy and system was very simple. Within 3 bars, if the market closes greater than the high of that doji bar, it generated a buy signal. And the strategy was very simple, and it had a very strong relative backtest study that showed it was about 67% accurate. That within 8 to 10 bars, the market would give you at least a 1-to-1 risk-reward ratio profit. So you would buy on the close the next time period's open. Your stop would go underneath the lowest low of the last 4 bars or the low of the doji. And the distance between your entry and your stop, you measure that amount to the upside. And within 8 to 10 bars, you had your profit target. And you have almost 67% or 70% profit probability of being right. Now, if it's even only 60%, that means 6 out of 10 times you are making money. 4 of the 10 times you're losing money, you're still in a profitable scenario. So sometimes the market will exceed the 1-to-1 risk-reward ratio. But what's powerful about this, and that's what I discovered about 20 years ago, and I published in that book, Candlestick and Pivot Point Trading Triggers, that was all back-tested, studied, and what was really neat is it gave us an entry, it gave us a risk, it gave us an exit strategy, and a holding period. What more would you want than those 4 elements when getting into a trade? For option traders, what's really neat about that is I know if it's a weekly signal, then I know that I need to have an option that's at least 8 to 10 weeks of duration. If it's an hourly, I know that possibly I need an option that might expire in the next 2 days, right? I mean, 8 hours, we have 6.5 hours of open outcry. And so therefore, this is a very prominent pattern and something that we developed into a trading system. In a trading system, by the way, a lot of this is TradeStation. Now I know this is about a program for traders with a higher function of HGSI. HGSI is a wonderful product that I've come to love. This is my original work that we created, the radar screen that you see on TradeStation. And basically everything that I've talked about today, this is the PC, the person's market catcher. And we, on our radar screen, as you can see, it's color coordinated: fuchsia, blue, bright blue, and red. So for example, I know if I'm running a scan or I want to look at the screen, and you look at this talks about daily high and low close dojis, weekly high and low close dojis. And what's really neat is you see this blinking, that tells you it just happened. So on a Friday before the market's closing, if I want to say, gee, should I be buying or selling Bristol Myers, for example, it generated it's either color coded, a low close doji, a PPS sell, and the relative strength has been weakening on Bristol Myers since its peak high way back at the beginning of the year. Bristol Myers, for whatever reason, just has not been able to provide any type of momentum to the upside other than paying their dividend. Now, on this screen, this is TradeStation. As I shared with you, I've developed some proprietary indicators. This is a momentum indicator of price between my proprietary indicator moving averages and this PPS. When a stock goes up and the indicator doesn't take out a prior high, it shows divergence. This is another indicator that is exclusively available only through TradeStation. This is my volume indicator. Very proud of this. This is something I keep very close. I don't like to share this often. It tells us the momentum change of volume, and it does a much better job than on balance volume. But if you don't have this, OBV is a good tool. As you can see, when a stock rises and the momentum or percent change of the volume does not go up, commensurate to possibly the rise in price and value, it shows a massive divergence. And everyone can see this. So if you're about ready to buy a stock and it looks great and it's starting to rise and the momentum of the volume is not moving like stronger, right? You can see these green bars are stronger. This tells me there's not a real strong conviction of institution people behind buying this. Maybe the Robin Hood crowd, but not the real money, the institution. what's the difference between the trend that was here and the trend that started to develop over since the period of July here? What if you see this weekly buy signal, what's the difference? The momentum's not rising positively. The relative strength is just absolutely horrid. It's red. What's the difference between the buy signal over here, July of last year? The relative strength started to improve. The volume was going up. The momentum was going up, and everything is positive. Big difference. What else do you see on this screen is defined as person's pivots. And as you can see, the person's pivot indicator, red is resistance, green is support. At the end of a time period, it calculates forward. That's why this was probably the best, and I'm biased, but again, this is the best leading price-based indicator, even more so in my humble opinion than Fibonacci. Fibonacci indicators require a little bit more work. You have to define the high and the low, and then once you have that, then you can establish the retracement or extension. With person's pivots, it tells you what the condition of the market is based on the last time frame unequivocally. If the market's bullish, it's going to paint a picture on the screen of a higher red and a higher green. And when the market fails that area and starts to close below a pivot, which is the blue line, you know you are in, the trend is ended. So with that stated, there are price-based indicators that you use at certain times. There are the condition of that price base, which is volume, and there is relative strength indicator that tells you whether or not this trend is sustainable. Because investors in the institutional world are not looking to day trade. They're looking to get into stocks that are sustainable. You know, we had a famous investor that the media has been talking about recently about how Warren Buffett had just recently purchased into, and I don't remember if it was the last quarter or whatever, but everyone's making a big deal about Bank America. And one of the things about Bank America that has not really floated my boat is that the relative strength, while it's gotten to improve, it hasn't turned bright blue or positive. And to me, it's just dead money in the water. And so what I would look at is, even though it's in a weekly buy, and this is a weekly chart on TradeStation, and I want to just share with you this last little screen, and we'll get back to looking at HGSI. Here's the daily, and the daily indicators, I mean, this is the PMC indicator. I mean, it just, as everyone was talking about buying this stock, if its price point is higher than its prior price point, and it is getting closer to a previous high, why is the relative strength not even growing? And so for me, if I'm looking at a stock that's going to break out, I want the relative strength mathematically calculating, saying, is it outperforming relative to the market? Is there any decent volume? If you look down here, there's a big distinction between on-balance volume and this personal private momentum of volume indicator. It turned negative. It's still negative. It's not positive. It's still red. So I look at here and I go, when would I be maybe looking to jump on top of a Bank America or any of the financials? When I start to see the relative strength turn more positive, and when I see the volume show me that really, other than Warren Buffett's in it, and every other guy that wants to chase Warren Buffett might be in it, Bank America is not on, it wouldn't be one that I want to put my cash to work in or buy options on. Because if you're in an option directional trade, you want something that's going to be now, immediate, and you're looking for momentum. And that's the bottom line. So before we go back to the page of HGSI, just want to share with you two other little charts. This is my top-down approach to the market. I look at the top stock indices, the spiders, S&P 500 that is, the NASDAQ 100, the Dow. I do look at the NYSE at times, but not as relevant in this market environment. The Russell, which is the least of relevance in this market environment because it represents growth stocks, and stocks aren't ironically growing. It's been COVID-19, FANG, and other momentum names. And the NASDAQ composite. So I want to explain what's on this chart, and we're going to start first and foremost with the S&P 500. My top-down approach tells me what is the strength and overall weakness of the market. 2 weeks ago, we turned cautiously pessimistic in the market, and I'll share that with you in just a second. As the stock price was rising, we were not seeing a cumulative breakout in the advanced decline. What is this advanced decline? Is it based off the NYSE that everyone else looks at? No. This is the advanced decline of the S&P 500. And this is exactly Friday's action. Friday, the market sold off, but 192 stocks were positive, advanced, in other words, 302 were negative. This line here is the cumulative tally of this day in and day out. Bullish prices are led by strength in numbers. And we've been bullish most of the year, except for back over here, blah, blah, blah. And our track record shows that. What's really exciting is that the advanced decline, when it starts to weaken and prices start to rise, it's a divergence. This down here is something called the McClellan oscillator. Now, this McClellan oscillator is a little different. It's not your grandfather's McClellan oscillator. We took the formula, modified it a bit, and applied it for data coming in from the S&P 500. So this McClellan oscillator shows us, on average, what the trend or strength of, or in this case, weakness of the advanced decline is doing. And quite frankly, as the market was rising in price, the McClellan oscillator was weakening, showing more stocks were actually going down and fewer stocks were controlling the cap-weighted S&P 500. Very dangerous sign. This is my volume indicator. Let me ask you a question. This rally here at the peak high, is the volume rising or is it falling? And you'll notice that in the last week, by the way, in the last 2 weeks, volume calculated in the S&P 500 on a week-to-week basis was the lowest volume readings as this trend was going up since last Christmas. A very, very poor volume environment. When price goes up on thin volume and you have divergence and relative strength, it's a bad sign. Get ready, something's coming. And that's what our work was suggesting and what we cautioned all our investors are. For the record, these are some models that we use. These are trading strategies. These are 60 minutes on the S&P 500, the Qs, the volatility, VXX, the Russell, and we created this in the XBI. We were short. I am flat for this weekend in our fund, and I am actually not as bearish the market thinking we're going to get as bad of a sell-off going forward. We'll have more information to see by Wednesday's close. Tomorrow's Tuesday. We need a couple days to see how the market is doing. But nonetheless, if you're looking at indicators and a strategy, and again, you can build your own strategies, but I'm just showing you what the top sectors are doing. These are strategies based on some that we use in our trading fund. This goes back, it's a 60-minute chart. As you can see, this goes back since 2015. To validate, if you're going to listen to someone, and I'm sure Jeff has got some very talented people in his group that he's put together for this Labor Day weekend special event. I'm sure you want to see if someone's got any talent, what have they done? And do they build any indicators that do well? And this is based off a PPS indicator. And this is going back since, again, 2015. Look at the performance, from left to right, it's pretty parabolic. It's ridiculous, actually. And this is where we look at different trading strategies. We created this one for people over the summer in a class I called Summer School, because I was looking for the biotech to start moving because Moderna, because of all the things, COVID-19, drug pricing, it's political, or it's always politicized. In the 2016 election, remember, we had both parties saying cheaper drug prices. So in any event, Everyone wants cheaper drug prices, but we would all appreciate a cure to multiple sclerosis, to cancer, to diabetes. And some of you might be in the medical field, would understand that research is not free and people need to be paid and it's expensive. So bottom line is there's trading opportunities in the biotech, and I believe in our society and in our environment, we want a trading model built for biotech sector, and that's what we did here. This left to right is a pretty decent equity curve. So the question now is presented. Does what John Person creates have any validity in work and in trading? And the answer is obviously, if he's built models, if his newsletter makes money, if his asset management is making clients money, there's validity in technical analysis. How you apply it is a different story. All right, that's the key. What's between the left and the right ears, and that's called fear and greed. Knowing when to get in and knowing when to get off the train ride. And that's what we've created with some of these indicators and these scans, is to help people understand what the condition of the market is. Is there cumulative value from volume coming in? Is the sector strong? So my 12th step, I just wanted to go through. Yes, I use Person's pivots. Yes, I use seasonal and cycle analysis, volume analysis and indicators. I just breadth analysis for stock indices. I just wanted to share with you, and I can't do much, and I think we're almost out of time here. Jeff, I don't remember what time I was supposed to end, but if you just send me a quick text, I'll know exactly when to stop talking. I wanted to share what is also a monthly. A lot of you guys can find this information from our old works, our newsletter. We post this in our weekly advisory service as part of what we do. You know, we put out different, I'm in the process of doing it, but our newsletter gives out this type of information week in and week out. And I thought I'd share it with you since this is being recorded, and you can kind of see if this year was normal, which we all know it's not, but what is, generally speaking, the seasonal trend in September? What's strong? What's weak? The funny thing is that usually the S&P 500 and the NASDAQ and the Dow and the Russell are strong in the early part of the month and denotes mid-month changes. So we start usually strong and end weak. This year, it's not a normal year. Seasonality's not been 100% for a lot of different markets. In September, here's an interesting one. Biotech is generally a strong sector, the XBI and the IBB, and drug companies in September. Retail is normally strong, other than Amazon. I'm talking about Lululemon has earnings this week, for example. Are people buying clothes? Are the kids going back to school? You know, whether kids go back to school or not, they still grow, and you need to put things on their bodies so that they don't look bad or fit, more importantly, unless you maybe cut the toes out of the kids' sneakers and then the kids can, you know, kind of have toeless shoes. That's not a good look, though, and your children might be, I don't know, teased on the playground if the playgrounds were open. So again, it's not a normal year. Regional banks start to improve. Airlines start to improve. Well, that's an interesting one because that's not a normal year that we'd keep our eye on airlines. And oil and gas exploration. Bearish, typically bonds, gold, silver, so casinos, copper. Now, the housing sector's been on fire. We had a big sell signal in copper the other week. A lot of things like BHP Billiton and Rio. And again, that came out to be a good analysis there. And so going into the month of September, I would keep this as a list and say, gee, if something is supposed to be bearish and I get new fresh sell signals, I want to probably pay attention to that. So as a swing trader, as an option trader, as a momentum trader, I'm going to kind of be cognizant, aware of these seasonal trends for the month of September in this space, and maybe, you know, use it with a grain of salt this year, but going forward, using seasonal analysis year in and year out is helpful. As a rule for seasonal analysis, friends, let me point something out to you. If a stock or a sector, and this is very important, so listen carefully, because this is going to teach you everything you want to know about seasonality. I've been using seasonal analysis since 1982. If you start off on the floor of the Chicago Board of Trade and you don't know that harvest lows are put in late fall in the grain complex, you got problems. If you didn't know that utilities, now this is back in the 1980s, utilities were heavily tied into the price direction of bonds. If you didn't understand intermarket relationships or seasonality, you probably wouldn't last long in the industry. The point that I want to make is this. Seasonality became very popular, too popular in fact, and everyone came out with an indicator. Thinkorswim has a really good one. Everyone came out with seasonality, and just about the time everyone knows about it, that's when it doesn't work as much. So one of the tricks that I always taught people was, if a market, and this is what's important, if a market has been in sync with its past recent seasonal trend, then, if it has been in sync with its past recent historical seasonal trend, then my assumption is it will continue to resume its natural seasonal flow. Throw all of that out the window this year because you haven't seen a lot of seasonality work. Number one, you have a lot of new companies that came to fruition, like example, Zoom, which was on nobody's radar screen until the pandemic started, which is really ironic because there's about 8 different programs out there other than Zoom, and the technology has been around a long time. It's just free, and I have a lot of users, and so it's a different story as a publicly held company. So again, new companies have come about. Microsoft, Apple, none of these companies were considered to be growth companies. I've never seen Apple have a 36 multiple. I've never seen, except for way back in the day. Just but for the record, just to compare, Apple in early 2019 had I think the PE was around 11 and a half. Let's call it round up and say 12. And when you look at Apple's valuation, you go, most people that trade fundamentals just can't understand that momentum. But anyway, a seasonal trend sometimes doesn't work, and you have to look at a couple of the items, the one that I just mentioned. If a trend is in seasonality, a stock that is, or a product, it tends to remain in its seasonal trend. Another thing that you need to know about seasonality is simply this. Sometimes one year the trend is going to be muted, meaning it might only go up a few bucks, and in other years it might be magnified. It goes up a few $100s. So again, the nature of the trend of the seasonality is not about its price movement. And that's one of the things that you got to understand. It's not an absolute. It is a helpful tool once again. So I thought it would be nice to just share with you what the seasonal trend is. So when we run scans, this is what I'm looking for. If I have an advanced trading strategy and it's a long only strategy, for example, in the S&P 500, because 70% of the time the market goes up, if you think about it, really. And so in those few times that you get a market that goes down, maybe you look for buying opportunities, and the seasonally strong period of time is when you turn on a long only strategy. In a seasonally weak period of time, you don't want to take buy signals. If the market is going to enter a seasonally weak period of time in September and it's had a hell of an August, why would anyone want to be looking aggressively at the long side and being a buy and holder and walk away and not monitor your position? As options evolve, and a lot of people, and I know Jeff and a lot of folks now are getting more and more involved in options. It seems to be the thing that unusual volume activity everyone seems to be enjoying, and it works. But I want everyone to know that you need to pay attention to volatility. And the one thing, and I'm just because I think we're running out of time here, the one constant thing that changes is volatility. On one of my screens, I'll go back here. On one of my screens, you will notice, and I promised I was going to cover this. I wanted to do this right now. Let's take a look at the E-mini S&P futures. And I want you to look at this average true range. And that is something I use a 10 period. You can use a 5, you can use a 20. This is what helps dictate the change in volatility in the market, is how does the market trade? And if we go back, I went back a little too far. And I just want to remind everyone where we are in history. I'm a big statistician. I'm a big believer in backtesting. I'm a big believer in computer programming. As you can see, I've developed quite a few very successful trading strategies that we employ. One of the things that I have always taught everyone, in fact, it's in the book that was written 18 years ago, Candlesticks and Pivot Point Trading Triggers, to watch for volatility, the ATR, average true range. Just to give you an idea, where are we in volatility right now? You might want to take me at my word for this. The 5-year average of ATR in the E-mini S&Ps, which is the futures, trades 24 hours rather than looking at the SPY, which is the exchange traded fund on S&P 500. The 5-year average on ATR is around 28 points. It's 27 point something. It's 28 points. In 2018, when people thought the world was unraveling, if you remember, in 2018, we had a little bit of a blip in February. Then we had another blip in December of 2018, right there. That blip right there, just to give you an idea, the 10-day ATR rallied up to around almost 90. It was 89 and change. 89 and change, I said, is where the ATR went to. And we'll just round down and say 88. But it's 80. It was 89 point something. The moral of the story is, if you look at average true range, when you start to see the ATR start to move higher, it's a sign that volatility is coming into the market. Volatility, generally speaking, for the S&P 500, ATR, by the way, is not a directional trend tool, except for you can kind of think about it in terms of it is with the S&P 500, because the S&P 500 or stocks go down usually a lot farther and faster than they go up, the overall market. Now, an individual stock could have an earnings and it just soars up 20%, and we've seen this, right? But for the overall market, when a rise in ATR, it's a sign that something is changing. There is a sign that is something changing. In January, by the way, as the market was starting to go up, the ATR was starting to rise. It was unnatural that we were seeing an increase. We started to see a trend of higher highs and higher lows, which is one of the reasons we were net short coming into February, and we're successful in our fund being short this market. We did not look for that type of sell-off. Well, the good news is we weren't into knife catching either, which, by the way, if you look at the ES, if you look at this little pattern, if you look at why is it so nice to see and scan for high and low closed dojis, there's a high closed doji which marked the low of the market, by the way, with our indicator a high closed doji, which, by the way, is on HGSI software, which is really cool, to scan for high closed dojis. That's a high closed doji. That is not in a morning doji star pattern. That is a John Person signature high closed doji. So the long and the short of it is, gang, we saw a rise in ATR. Look what was going on as the market. We were starting to see the ATR start to decline as the stock market started to recover. Leading up to last week, the ATR, by the way, the ATR was rising before the market had its little hiccup. Again, that's why volatility is measured off of something. It's not, obviously, when you see the VIX go up, it's a sign of caution. Why are people buying put options? And the demand for options going up is one of the variables that causes a valuation change in the VIX. When you see a rise in the VIX and you see a rise in stocks, you believe the VIX, you don't believe the rise in stocks. You believe the VIX, because the VIX has got a lot more smarter people and there's more elements to calculation of VIX. Last week, the VIX was rising and the S&P was rising, and a lot of people were scratching their head why. It was a delayed reaction. And that's what the the term patience and discipline, trust your indicators. On the rise of the market, there was no volume coming into this play. So again, technical analysis, if taught correctly, if using a set of logical indicators, it will help prepare you for better trade opportunities, knowing when to hold, when to fold, and that's part of what I believe we've helped to develop, not only in the field of technical analysis, but also many traders from hedge funds to institutions that actually lease and use my instructions and indicators. These are very powerful tools, and again, I didn't invent volume, I didn't invent pivots, I didn't invent relative strength, but I did invent and create how to logically weave these indicators together and create a modernized approach of how we look at them and how that information is delivered to us so that investors can make better trade decisions. With HGSI's platform, as you notice, I don't have a lot of things here. I don't need to look at 15 different market indicators. They may be helpful, and if they help you, that's fantastic. But what I want to look at is, if I'm looking at a buying opportunity, do I see the relative strength improving? Do I see volume coming into that as a trade? Do I see its sector improving? And those are the things that will help me to define a bullish or maybe positive or negative outlook on the market, and look for short-term buy and sell signals. By the way, I think we are seeing and this is one of the things that I tweeted out. I've put on my own YouTube channel. I do a lot of customer appreciation events for Thinkorswim, TradeStation, and HGSI. And I'd like to share that I believe that you're just starting to see a rotation maybe back into a few names. Look at what we generated on Friday. Interestingly enough, you're starting to see some of the financials got a bid on Friday, a bid meaning buying. So while the market's sold off and everyone's looking student body left at Apple and Zoom and things like that, and great sell-offs, and even the S&P 500, which again, I just, as a disclosure, we were short, we covered, we're flat for the weekend, and probably should have reversed if I had a chutzpah gone long, because all our indicators actually went long on the close on Friday on some of our trading models. But at this point in time, I think it'd be better to say, well, maybe, we take a look at 2-3 days. There's going to be a lot of opportunities as we get through this year. So how we put things together is a fabulous approach to the marketplace. Real simple, break it down. Am I bearish? Am I bullish? Real simple. I could take a very simple approach. How many stocks on Friday generated sell signals, and what sectors were they? Okay. How many sectors on Friday generated bullish stocks? And I could take a look at that. And I'd say, oh, on a daily basis, not many generated, a lot more daily sells than daily buys. If I get the change of guard, that I get more buys, and can you imagine this? A stock that gave a daily buy signal when the overall market went down, if the relative strength's improving and there's volume attached to it, that has relative outperformance and might be a good move if we get into further gains of the overall market. So anyway, I hope I was clear. I hope it helped you. I thank Jeff for allowing me to present. I just wanted to share with you guys my famous slides. I've been teaching this for 2 decades from traders at the Board of Trade and all the way through the years. Success comes from not only the right education, but applying what you learned. There's a lot of people out there teaching things, but I think we all know there's education, and then there's better education, but then you have to apply what you learned. It's consistency over a period of time that one acquires confidence. Just remember this. I want to explain this because it may not seem funny to some. Losing trades are going to happen. You're not going to buy the low. You're not going to sell the high. You're not going to make money every single trade. It's all right to lose a little money sometimes. Some people might lose their shirts and say, oh, that's horrible. But as long as you don't lose your pants, that's where your wallet is. Then you have money to come back in the market. I thank you guys for allowing me to present. I think that was just a little under an hour. I apologize if it was supposed to be more or less. It's definitely a prideful moment in my life that I was able to do multiple things in this world, trade the market successfully, and finally get the monkey off my back, which was fulfilling a contract I wrote like an idiot by coming out with a second edition book when I claimed I would never write another book again. Because I want you to know something. Crossing T's, dotting I's, rereading, going through, correcting, sending it to an editor, having them edit it, sending it back to you, blah, 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 blah. What's the color of the book? I don't care. What's this? What's that? And you know what? The second edition of Candlestick Pivot Point Trading Triggers is finished. It should be out probably in October. It has wonderful teachings, and it gives a lot of examples of everything we talked about today. I sincerely would tell you guys that would be the best way of learning a little bit more about my work, as well as understanding some of the foundations of pure technical indicating trading. Thank you all very much for attending. And Jeff, thank you for allowing me to share. And now I will unmute me, or I will mute me, excuse me, and pass the baton back to you. Thanks, Jeff. Thank you, everyone, for attending.
All right. Thanks, John. I'll wait for you to send it back to me. When you have to change me to host. Change me to host. All right. Perfect. All right, John, are you going to make me host? I guess you're going to make me host now. Okay, hopefully you guys can hear me. It looks like I'm back, and I am now the host. And let me pull up the chat thing so I can make sure you guys could actually hear me. Chat. All right. Can you guys hear me? If you guys could just, okay, perfect. Well, first of all, thank you, John. That was outstanding. Outstanding, outstanding. For those that have further interest, if you go to personsplanet.com, this is John's website, all kinds of information there. If you go under the indicators, you can find the HGSI platform, and he's agreed to continue the introductory pricing. It went back up to 1127, but they've reprogrammed it back to 727. You need to have HGSI to use, at least to use it in this platform. Anything else I'd like to say? I mean, I've made it very clear how, in any of my videos, how often and how much I appreciate what he's done and how I use it. There's also information on TradeStation and other platforms. So we're doing okay on time. I'm seeing it's 12:23. I'm going to switch Dr. K on shortly. Why don't we all take a bio break and restart at 12:30, which is in 7 minutes. So we're going to start back up in 7 minutes. Dr. K, I'll come back at about 12:26 and switch it to you. Thanks, everybody. I'm going to pause it right now.